Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 31st through April 4th. We're in part one of our weekly trading game plan. We'll try to help you make money trading this April. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of March 31st through April 4th. We keep our notes in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this weekly part one of this weekly trading game plan, as well as previous weekly trading game plan notes documents. And you can also find a direct link to this Google Drive folder in the description box below. So firstly, we'll take a look at how the markets ended up on Friday, and then a breakdown of the major indices and the technology components. So we can see all the markets down pretty significantly on Friday. In my humble opinion, I think this was a take profits, risk off, move to the sidelines in preparation for the tariff announcements on April 2nd. So as we saw, we had a couple up days early in the week and then rolled over towards the end of the week. We also got some economic data that we'll take a look at. So again, all the markets significantly down on Friday. Dow down almost 1.7%, NASDAQ down almost 2.7%, and the S&P down 1.97, again, almost 2% down. You can see the whole day was pretty much a down day. Many more decliners than advancers, so we had 78% declining, only 19% advancing, only 18% new highs, almost 82% new lows. We've now only got 27% above their 50-day moving average, 73% below, only 32% above their 200-day moving average, 68% below. So again, a lot of weakness under the covers, more downside to come, very bearish. See a severe rotation out of the Mag 7s, so profit taking again out of the Mag 7s, big downturn in the markets. The only sectors that are slightly green, healthcare, again, very defensive. So we'll see a very defensive move all through the week, and utilities. So again, a very defensive, and also, in my humble opinion, somewhat of a tariff resilient sector is utilities. Welcome, Ricky Khan. Thank you for joining us. Hope you had a great trading week and are doing well. So some news, recession. Home builders face muted spring selling season. Again, possible impact of tariffs, higher for longer rates. Wall Street ahead, wobbly with tariffs and jobs data. Stocks fall on tariffs, consumer sentiment fears. Again, we'll look at the consumer sentiment data. Dow closes 700 points lower as inflation and tariff fears worsen. High conviction bets unravel in Trump trade rebuke. So again, all concerns about tariffs. We'll talk about that. Oil did go up and test 70, got rejected off 70, bounced back down in the 69s. Natural gas had dipped down below 4, rebounded back up above 4, so it's kind of oscillating around that 4, generally an uptrend. Gold's just been a beast, so it broke 3,100. I think it almost made 3,150. So now bouncing between 3,100 and 3,150. Again, a strong uptrend in gold. See all the futures pointing significantly down. Treasuries did retreat significantly. Treasury yields retreated significantly on Friday. Again, in my humble opinion, I think this was just a risk-off move. And so we saw the 30-year back down to 4.6, down 2%. 10-year 4.25, again almost 2.5%, and the 5-year down to almost below 4%, and down 2.86. So bond yields significantly down, bond prices up. Again, I think this was all just a strictly risk-off move in preparation for the tariff news. Welcome, Sydney Osborne, Katon. Thank you all for joining us. Hope you all had a great trading week and are doing well. So if we look at a breakdown of the major indices, and we see all the major indices, we had a little bit of a continuation of the correction up in the beginning of the week and then a quick rollover. So it kind of gave Wednesday hump day another new meaning. So we hit that hump, rolled over, Dow back down below its 200-day, head back down to that lower trend line. IWM very weak. Also, we see we've got a death cross now in IWM, so very bearish for small caps. So again, significant down, headed down to its previous bottom. And again, got a death cross on IWM. So again, very bearish on small caps. The Russell, the Qs broke down below its previous lower trend line. Looks like it tested its previous low of early March. Again, headed down. SPY down to its lower trend line. Again, significant drop. Looks like it'll retest its March low, and then we'll again see from there. Look at a breakdown of the technology components. Just a quick reminder, you can access these screeners in our notes documents and also in the screener sheet of our ETFs and watchlist Google Sheets. So we see ARK-K had popped up, almost tested its upper trend line, then quick dramatic retrace back down, broke down below its lower trend line. Again, below its 200-day moving average. So again, we had that a little bit of an exuberant rally end of last week, first couple of days of this week, and then a quick reversal back down, pretty severe, a lot of momentum to the downside. Biotech, again, very weak, significantly below its 200 days, kind of bouncing off that lower trend line, but just headed down. Again, sensitive to interest rates. Also, we're talking about tariffs on pharmaceuticals, get negatives for the biotech industry. Semiconductors also have been very weak, so not a whole lot of catalysts. The AI bubbles pretty much burst, and so semiconductors also been steadily downtrending. The Mag 7, again, we saw that risk off, profit taking out of the Mag 7, so it broke down below its lower trend line. And probably more downside, more profit taking, and risk off out of the Mag 7. And then we'll see if they rotate, if they treat that as a safety trade as they have in the past. Some of these are less susceptible to tariffs than others. So we'll see if we get an eventual rebound in the Mag 7. TQQQ just leveraged on the NASDAQ. So we see similar behavior, broke down below its lower trend, headed down to that August low. Broad Technology also broke its previous low of March, headed down to its August low. So a lot of negativity in technology. So a lot of profit taking in technology, a lot of downside in technology. So that quick rotation we saw earlier in the week, and then profit taking towards the end of the week. Again, we see that steep decline. Just a quick reminder, none of our content should be considered financial advice. All of this is my opinions and should be considered for education and entertainment purposes only. Okay, let me grab a quick drink and we'll look at the groups, sectors, industries, and countries and look for opportunities to make money trading this April. Also deal with these tariff announcements. Okay, we look at the groups, the sectors from Friday, again, very defensive. So the only positive was utilities. Again, very defensive move. Also, again, my humble opinion, I think utilities are probably the least sensitive to tariffs. So not surprising people are rotating their money to utilities. Also, real estate, some REITs, dividend payers, healthcare a little bit, defensives and energy. Most negative, technology, cyclicals, consumer cyclicals, communication services, also financials rolling over. For the week, again, also very defensive. So we got consumer defensives. Again, that's just a very defensive risk off move. Energy, real estate, again, very defensive moves. Most negative, technology, communication services, and healthcare. So for March, the only real positives was energy rebounding. Again, we saw oil prices bounce back up towards 70, and then utility slightly positive, basic materials slightly negative. But again, technology, consumer cyclicals, communication, again, AI bubble burst, rotation out of technology and also out of the Mag 7, attributing to this very negative sector in March. So we'll see if we get a rebound, a sector rotation back in after the tariff announcements in later April. Look at the industries real quick. And we see REITs, real estate, solar rebounded a little bit, a lot of REITs, utilities, energy, again, oil. Really the only positives from Friday, big negatives. Retail, luxury goods, some materials, so steel rolled over, copper rolled over, silver rejected, headed down a bit. And then technology, airlines, and travel, see recession fears coming up. Aluminum and tariff concerns as well. So for the week, again, some REITs and mostly utilities. Energy, gold had a positive, again, broke new all-time highs. Coke and coal positive, and REITs, oil, steel negative again, silver negative for the week, solar very negative, airlines, copper getting rolled over, uranium very negative for the week, and we'll talk about potential play, how we would play uranium, and the aluminum very negative. Also parts, auto parts, tariffs on autos, on auto parts, very negative for the week. For the month, silver and gold very strong, metals in general very strong, oil and materials, energy, utilities, REITs. Most negative, airlines, retail, and probably technology, building materials, etc. So again, your tariff sensitive sectors. Again, we're starting to look at international. We've been looking at international markets, and I think, again, this is where the opportunity is with the tariff trade wars, etc. However, again, this week, we're going to get these tariff announcements. I expect a lot of volatility with the announcements of tariffs on countries, so that'll hit these countries negatively. And then the retaliatory tariffs and the retaliation on the retaliatory tariffs. So I expect a lot of volatility in these international markets as these tariff announcements come out, and then the retaliatory tariffs, etc. So if you're very nimble, I think there's going to be significant opportunities in these international markets. If you can catch them quickly on the negative news, the ones that are going to rebound, benefit potentially from rotations in global trade, etc. So we've been talking about this for several weeks. So you can see from Friday, Turkey very positive. Also, you'll see we've got a number of ETFs in our ETFs Google sheet to help you trade international markets. And we're going to add some more from this list this week. So again, I think this is a significant source of opportunity. So keep an eye on this countries list as the tariffs are announced, retaliation, etc. So again, we see South Africa's outperformed a lot, has a lot to do with gold. We're going to look at Turkey. We're going to look at Greece. See, very negative. Malaysia has been very volatile. So again, a possible opportunity there. Indonesia, Thailand. Also, we have Vietnam. You see China turn negative. Again, a lot of volatility with China, Japan, South Korea, Argentina. So again, I think international markets a source for nimble short-term traders this week with all the tariff announcements. So for the week, we see again Turkey, Indonesia, South Africa, Mexico positive, India, get a lot of tariff exposure, Mexico, India, etc. Australia, Europe, see the US, down here, negatives, Taiwan, Malaysia, again, very volatile. From March for the month, see a lot of Europe was positive, India positive, again, South Africa outperforming dramatically, plus 22%. In Greece, positive, India. You can see the US way down the list. So again, Malaysia very negative, so possible rebound opportunity in Malaysia. Again, we have the EWM ETF in our ETFs research sheet. So again, one we've looked at recently, and you can keep an eye on that one. Again, you see Turkey had rebounded. So again, Indonesia, again, we've got IDX in our ETFs research sheet we've been watching. Also Thailand, THD. So again, my humble opinion, I think international markets is if you're nimble with all the tariff announcements, possible opportunity to make some money on those tariffs announcements and retaliation, etc. So I hope that all helps. Yeah, Malaysia just had an earthquake, so again, possible source of some negativity with Malaysia. Easy Mike, K-Town's recommending OFAC, check the OFAC list for trade imbalances, etc. But again, we'll have to hear what the tariffs come out, and then retaliation on the tariffs, and then retaliation to the retaliation, etc. So, okay, let me grab a quick drink and we'll go through the economic data from last week, look at the upcoming economic data for next week. Although again, in my humble opinion, I think the big factor is going to be tariffs and people waiting to hear the tariffs. So I think that will be the major factor for next week. Let me grab a drink and we'll take a look at the economic data. Just a quick reminder, as the important economic data comes out, important economic news, try to capture it as quickly as possible and post it in the Surf the Markets channel of our Discord. Our Discord's free to join. You can find a free invite in our notes documents as well as in the description box below. So again, as you can see, as the important economic data comes out, capture that from investing.com, screenshot, raw data, post that in the Surf the Markets channel of our Discord. Also, any important economic news or Discord, again, a great source of real-time economic data, real-time economic news. We also have plenty of channels where you can discuss all things trading, all kinds of different asset classes using different trading platforms, different trading styles. So we'd love to have you join our Discord, actively participate in our free Discord, and you can do so 24/7. Chat all the time in our free Discord. Last week, not a whole lot of economic data Monday through Wednesday. Thursday, we got weekly jobless claims data and also GDP data. So we see initial claims was pretty much in line, a little bit below expectations. Continuing claims also below expectations and went down. So again, the job market remains resilient. The Fed doesn't have to be concerned significantly about the job market. Also, the 4-week average went down. So again, we're not seeing a lot of impact from the government layoffs or even the impact of contractors laid off from the government. So again, job market remains resilient. GDP, a little better than expected, still positive. This is quarter 4. So no sign of a recession as of quarter 4. We'll have to see what happens with quarter 1, the impact of tariffs. Can see a very significant trade imbalance. So possibly a lot of people buying ahead of the tariff announcements. Also got PCE prices, some PCE data Thursday, a little bit better than expected, although still high. Consumer spending, a little bit lower than expected, but it's again still positive and better than previous. Inventories still up, but not as high as expected. And Friday, we got core PCE data and more PCE. This is the Fed's preferred measure of inflation, and it was hotter than expected, went up. So that's a very negative from terms of Fed interest rate cuts. So don't expect Fed interest rate cuts anytime soon. They need to keep it high to fight inflation. And again, we just saw no real concerns with the job market right now. So they can wait for further data. Again, this shows, inflation going up. Again, in my humble opinion, I think this was probably people buying ahead of tariffs, driving demand up, driving some of the prices up, as this is the supply side, the producer side. So again, I think this was we're starting to see the impacts of the tariffs. I think tariffs are going to drive consumer inflation up as well. Personal income up, better than expected. Spending still positive, but a little less than expected. Then again, very negative for inflation, which we saw the Michigan consumer sentiment. Their 1-year inflation expectations went up to 5%. So very negative trend from the consumer's perspective of inflation. Their 5-year inflation expectations went up to 4.1%. So again, consumer very negative. Now, Powell kind of discounted these sentiment survey data, and they want to see the hard data, but we see kind of a combination. Both the PCE inflation and the sentiment data went up. So again, very negative factors in terms of inflation. So again, don't expect interest rate cuts anytime soon. Again, next week, the big day for tariffs is the 2nd, April 2nd. So we'll probably get rumblings before that, expectations of what's going to be announced before that. But again, I expect people to kind of wait and see what these tariffs are and then the retaliation. So I think, again, market will be volatile, low volume. Until we hear that tariff announcement. A lot of people, waiting to see what the impact of that's going to be, and we'll be taking that position as well. So probably not a whole lot of activity until after the tariff announcement on the 2nd. We look at the rest of the economic data from last week. So we got global manufacturing weakening, again negative, possible, indicator of future recession. Building permits, a little better than expected, but negative. House prices still high, 4.8%. Consumer confidence, again, dropping. Home sales, positive. So again, maybe front running, the increase in prices due to tariffs. Got Fed officials talking. Crude oil stocks down more than expected. Again, we saw prices bounce up. We've also got the Yemen attacks in Yemen, possibly driving oil prices up. Mortgage rates dropped slightly. Applications dropped. Durable good orders up significantly. Again, I think that's front-running tariffs. Oil inventories down more than expected. Again, we got oil prices up. Talks about jobless claims and GDP and PCE, consumer spending, home sales, again, up a little bit. Natural gas storage pretty much in line. Again, we saw it dip below 4 and then rebound back up above 4. Talked about PCE prices and Michigan sentiment. Here's that Atlanta GDP now down to negative 2.8. So again, a lot of people have been talking about this as forecasting a recession to come. Oil rig counts dropped a little bit. So again, possibly boosting oil prices up a little bit. Let's look at the economic calendar for next week. Chicago PMI, more Fed officials, again, some global manufacturing, ISM manufacturing, JOLTS data. Normally this would be a important indicator for the job market, see if it's tightening up a little bit. So that might create some volatility. Although again, I think the economic data will take a backseat to the tariff announcements. So Wednesday we get the tariff announcements. We also get some mortgage data, some non-farm ADP non-farm data, factory orders. Thursday we get job cuts, weekly jobless claims, ISM non-manufacturing, and Friday we get non-farm payrolls. So after we get the tariff announcements and all the fallout from that, then Friday we've got non-farm payrolls. So we'll see if we see any indication of the job market weakening in March. If we see any impact from the government layoffs, DOGE, etc. The job market does show some deterioration. The Fed will have to balance deterioration in the job market versus the still high inflation. So see what we've got for earnings. Probably coming up, starting again, not too soon. Looks like we're rolling off last earnings season, and then we'll kick off the next earnings season again. So it looks like some housing, not a whole lot right now. Some gold, some biotechs. So again, you can go through the whole list. See if there's anything that would impact your trading. Again, quite a few. So more biotechs, looks like a lot of small caps, BlackBerry, etc. So again, people will be listening for their exposure to tariffs. So again, I think the main focus is all going to be on tariffs, not so much how people reported from the last quarter, but their guidance going into next quarter. How exposed are they to tariffs, etc. So again, you can hear how we trade around earnings via the link to our video. Again, we don't have another Fed meeting until May. So, and we got their latest dot plot, and I don't expect any changes to rate cuts in May. The earliest would probably be June. And again, with the high inflation and the resilient job market, I don't see a cut anytime soon. So I hope that all helps. Let me grab a drink and we'll look at the market screen in Webull. And a quick reminder, if you're not already using Webull, you can get up to 20 free fractional shares of stock by opening and funding your account with as little as $500. Each fractional share worth $3,000 to $3,000. You can use our affiliate link in the description box below. You can get your free fractional shares of stock, take advantage of any other promotions they may have at the time, and also help support our BeachBum trading community. You can also trade overnight, 24 hours a day, 5 days a week in Webull, and you can get more information about overnight trading in Webull via the link to our video in the notes and also the posting in our Discord. I'm looking at the market screen in the online browser version of Webull, so we can see the histogram of the distribution from Friday, so a lot more decliners and advancers. Decliners significant, so a lot of profit taking, risk off, move to the sidelines on Friday. So 5,000 decliners, only 1,100 advancers, and advancers very small, so very much a risk off, get out of the market on Friday. So we see a steady outflow in both the NYSE and the NASDAQ. NASDAQ more severe, starting at the beginning of the day and flattening out, but again, significant risk off, get out of the market, get out of the pool on Friday. Although the fear gauge actually went up a little bit, so a little less fear than the previous week. So I think we bottomed at about 9. Last week was 17. Now we're at 19. So even though we saw that dramatic drop, it didn't really increase the risk significantly in the fear gauge. Yep, and as Kayton pointed out, we've been talking about this for quite some time, pointed out, so hopefully you protected your profits. We're ready for this dip. We're able to protect your profits and actually make money, trading the bear market that we've had. So welcome, Gerald Pitts. Thank you for joining us. Hope you're doing well. So again, you can see the earnings calendar for next week and the calendar widget also in Webull. So keep an eye on near-term earnings on a daily basis. Let's look at the best performing industries for the week. So again, utilities, some finance, consumer defensives, again, defensives, insurance, oil and gas, auto parts, again, mostly negative, but some positives. Again, tariffs on new autos. So there's speculation that used cars and auto parts would benefit. So a lot of people chased the used car providers and the auto parts stores and probably made some money there. Again, defensives, consumer goods, some healthcare kind of split. Again, utilities positive. Natural gas utilities, coal, slightly negative. Get the ETFs. So Dow, down on tech, TCS, down on small caps, down on S&P, down on the Russell, down on the Qs, again, down on tech, down on the NASDAQ, so all very negative, up on volatility, UVXY, VXX, VIXY, down on Bitcoin, down on small caps, the Russell. And not a lot of positivity, real estate, utilities from Friday, everything else pretty negative. Even defenses were mostly negative, so not a lot of positivity on Friday. Commodities, natural gas. $25 long end, 20, so long end bonds, positive. Okay, let's look at the futures also. Again, you can also trade futures in Webull. You can get more information about trading futures in Webull via the link to the posting in our Discord. We look at the futures, and we see that, couple day rally rejected, like Dow rejected off 4,300, quick drop back down, again headed back down to the March lows. S&P, again dramatic drop, and after that hump day, a couple days up, quick gap up, rolled over, quick down, headed back down to its March lows. Looks like the Nasdaq pretty much at its March lows, but again further downside to the August pre-election lows. Also same, not quite to its March low, so again more downside in the Russell. Nikkei rolled over as well, pretty significant drop. Also the Euro stocks, it finally topped and rolled over, broke its previous low. Even the DAX, although it's holding up better, again vulnerable to tariffs. So we'll see if we'll probably get some significant volatility, possibly some more downside. We do have an ETF you can short Euro stocks in our ETFs Google sheet, and you can short the long on the DAX. If you can short ETFs in your account, we do have a long on the DAX, and you can short that ETF. And we saw a big pop in volatility. Easy Mike mentioned he got in Thursday, long volatility, good move, and I expect a lot more volatility going into the tariff announcement on the 2nd. So let's look at the volatility term structure very quickly. And again, you can find the volatility term structure tool in the link section of our homepage, beachbumtrading.com, bum without the U. Go down to reference links, we can see the VIX futures term structure. You see it popped up quite a bit. It's very interesting. It's now significantly above the term structure curve, and we see a high volatility in April and dropping off, flattening out, but staying above 20 for an extended period of time. So again, big pop right now, and expected to stay in the 21s during April. And then again, flatten out, but stay above 20. So it did move up a little bit on Friday. But again, not a significant change, but again, the index coming down in 30 days and then trending up from there. So I hope that all helps. And we saw oil test 70, get rejected off 70, rolling back down. So range bound between 65 and 70 right now. And natural gas had dipped below 4, looped, swung back up above 4. We'll see if it goes back to retest that 450 level. A lot of volatility. And gold just been a beast, up in the 3100s now. It did gap up significantly, so it might get a little bit of digestion there, but again, strong uptrend in gold. Silver similarly tested 35, rejected off 35, back down. So we'll probably get a rebound again. Strong uptrend in silver, platinum, and palladium, a little flatter, oscillating. Copper's again strong uptrend, corrected a little bit at the end of the week. Grains trending back down. So corn, oats, wheat near its 52-week low, and we'll talk about this yesterday or tomorrow. We went long again wheat using the WEAT ETF. Again, I was probably just a little early, so if our Patreon members got our notification when we went long wheat, good opportunity. You could get in probably cheaper than we did. But again, I'll look for a swing back up. We make good money on swinging wheat and these big swings. You can see it has nice swings. And again, it may go down a little bit farther. And then we'll see if there's any impact of tariffs as well, retaliatory tariffs from China, Brazil, etc. Lumber, again, impact of tariffs staying high. Coffee looks like it found a stable level. Sugar, and we saw that significant decrease in bond yields, bouncing bond prices on Friday after they'd been trending down for quite some time. Again, I think that was a risk off. Probably see some more of that early next week, and then we'll see the impact of tariffs overall on the dollar, treasuries, foreign currencies. So see the euro bounce back up, dollar rolled over a little bit, yen bounced up a little bit. British pound been pretty stable. Canadian dollar been pretty stable. Again, vulnerable to tariff announcements. So you can also trade. We've got a number of ETFs to trade the foreign currencies. If you're not a Forex trader, you can also trade these with ETFs in our ETFs Google sheet. You find those in the ETF database sheet and our ETFs Google sheet. Trade some of the foreign currencies that way as well. So I hope that all helps. Okay, I'm going to skip forward and we'll talk about our theme for this week, and we'll come back and we'll look at our ETFs. So let me grab a drink and let's talk about making money trading this April. Okay, again, our theme for this week is to make money trading this April. So we'll look at the historical seasonality for April and how April tends to perform. We have a link to this Investopedia article that we typically use. So last week we looked at the spring season in general. This week, if we focus a little bit on April, and you can see April tends to be the most positive month of the spring historically. So from 2000 to 2024, up almost 1.7%. From 1928 to 2024, positive 1.3. And again, April historically has tended to be the most positive month in the spring. So we get this uptrend. February tends to be slightly negative. March positive, April the most positive. Then we get the sell in May crowd, sell in May and go away crowd in May. So we get a drop off. So historically, April has tended to be the best month again in the spring. So we would expect a positive April. However, I think Trump's tariffs may trump this historical trend, at least for the beginning of April. We see right now we're in a significant bearish trend. March may end up being a negative month, which again, historically, it's positive. So we may be in a very negative trend, a bear market, and break this historical trend. Also might see the sell in May crowd might be selling now, getting out ahead of the tariffs, and they might just wait to see again the impact of the tariffs later in the year. So again, this historical trend may be getting trumped by the tariffs. You can hear our previous discussions about how to trade in April showers in the markets, how to make money trading in April, how the markets typically perform, best performing historically, the best performing sectors and industries via the links to the videos in our notes. Also, we've done a video previously to talk about some trading strategies for making money trading tax season. So again, in a couple of weeks, we got the tax deadline, people getting refunds. Where do we think that money might go? Do you think this year people are going to just save their money? Potential recession due to high inflation, etc. So I'd love to hear your feedback. Do you think that this historically positive trend is going to get trumped by the tariff news, or are we going to end up with a positive April? Also, what do you think the impact of tax season this year will be on um, consumer spending? Also, again, last week we looked at the overall spring trend. We just talked about. You can also hear the best performing industries and sectors in the spring via the links to the videos in our notes. So again, we'd love to hear your feedback if you think this year will follow the historical trend, have a positive April, or if you think it's going to get trumped with all the tariff news, all the tariff negativity this year. So I hope that all helps. We'll go back and look at ETFs. Again, when we come up with our trading strategies, trade ideas, and we can go to our ETF Google Sheet, whether it be a long or a short trade idea, and we can identify ETFs that we can use to trade that long or short trade idea, be it on a commodity, an index, a country. Again, we mentioned foreign currencies, etc. We've got all those in our ETFs Google Sheet. And you can do likewise, get a 24/7 access to our ETFs Google Sheet by joining our Patreon. Got a couple new additions to our research sheet that I want to do some quick due diligence on. As we pointed out, some of these countries were popping up in the countries list, international markets list in FinViz as being positive performers. And so we wanted to have some opportunities to trade these international markets as well. So the first one is Greece. So we found a long on the Greece market, GREK, Grek. So we'll take a look at that one, and then TUR for Turkey. So again, we've added those to our research sheet so we can trade the international market in Greece and in Turkey. We'll do a find on GREK. Again, you can do a find in our ETFs Google Sheet for different countries, commodities, etc. So here's GREK for Greece. So you can see 52-week, not a whole lot, great risk reward. It's pretty high right now. Again, you can see it's at 48.47, 52-week high 48.98. See, it's got upside though from the past. So we'll take a look at this in FinViz. So here's GREK, again, pretty high, an outperformer. Probably would have been great if we got this, back in December, had a significant run up. So congratulations if anyone traded the Greek markets from December. AUM's not too bad, 185 million. Pretty low volume, so again, it's going to be kind of choppy. It is optionable, it is shortable. So if you hear, tariff news or any reason you think it's topped out, Greece will correct. You could short the ETF. Expense ratio is pretty low. Look at its holdings. So banks, National Bank of Greece, Eurobank, got some energy and metals, some services, football, power, telecommunications, cement. So pretty diversified. See over 50% of finance. So again, if you think you see decent inflows, look at the description, you can see what it's following. MSCI All Greece Select 2550 Index, so that's the underlying index. Got global ADRs, global ADRs. So if we again zoom out a little bit, look longer term, and still some significant potential upside. It's broken out. So if you think it's going to continue up, still some significant potential upside in GREK for the Greece markets. Bottomed out in 2020. So nice uptrend. Again, if you think there's more upside in the Greece markets, they might be a beneficiary from some of the tariff news. You can use this GREK. So let me know if anyone's traded this GREK ETF to trade the Greece international market in the past. Love to hear your feedback. Next, the Turkish market. So Turkey, if you want to trade Turkey, we saw it had rebounded as well. There's this TUR ETF. See, it's got a little bit better risk reward from 52-week, looking attractive right now. So it's relatively low from top to bottom. Pretty nice, factor of 5. We look at that in FinBiz. So again, it recently bottomed. It's like it's bouncing back up. So you think the Turkish market's going to recover? See resistance around 38. See, it's got AUM about 185 million as well. A little bit higher volume, 206. This is shortable as well. So if you think the Turkish markets are going to trend back down, you could short this ETF. It is optionable. Again, expense ratio not too bad. Composition, again, pretty diversified. The highest sector is finance, but only 21%, where Greece was 50%. So looks like some banks. A little bit harder to see what these are. Probably communications. I'm not as familiar with a lot of those companies, but again, you can see it's broadly diversified, a lot of sectors. And if we zoom back out a little bit, again, longer term, it's got significant upside, some risk. Looks like it's trending down recently. Got some support from that long-term moving average. So again, if you think it's going to continue down to retest its previous lows, you could short this ETF. If you can short ETFs in your account, if you think it's going to swing back up, you could long using this TUR. And again, you can keep an eye on these both these countries in the countries list in the groups on FinBiz. So again, we saw Turkey had rebounded. So if you're nimble, you can trade these rebounds, make some money using the TUR ETF. So let me know if any of you have traded Turkey, the Turkish markets with the TUR ETF, what you think of that. What do you think of trading, the Turkish markets? I do believe they did some what I'll call manipulation. I think they put a halt on shorts at some point, and possibly that's the attribute to the rebound in their markets recently. So again, just be aware. It seems like they're doing some control of their markets, may benefit, and you might be able to make some money off that. But keep an eye on some of that news as well. So I hope that helps. Also, very quickly wanted to look at a couple ones we've added from gold. And these were ones that were mentioned by the Crow several weeks ago in our live chat. So the first is BAR, B-A-R. Second is Shiny, S-H-N-Y. We put those in the research sheet of our ETFs Google sheet. Under gold, we've got, quite a few with gold, both in our main sheet and our research sheet. So you can see we've got leverage longs and shorts, some are on the futures, some are on the minors, etc. So you can pick the one with the risk reward profile, the composition, etc. Again, we've seen a strong uptrend in gold, some volatility. So you can, if you're nimble, you can trade the volatility. But we also wanted to look at these bar and shiny, as bar is the Granite Shares gold miners, and shiny is a leverage long ETN on gold. If we look at bar first, you can see the risk reward 52-week on bar 1.3. It's pretty high, close to its 52-week high. But we made a new high top. Look at shiny. It's at 62, almost 63. If I look at the composition of bar first, again, very high, given gold's very high. Got pretty good AUM, 1 billion, almost 1 million in volume. So volume's pretty good. Expenses very low. This is not optionable. It is shortable, so you could short that. Look at the composition. This has physical gold bullion. So if you want to have an ETF where it's based on the actual physical gold, you could use bar. And I'm sure it's probably at its all-time highs. Yep. Been around for a little while. So again, if you want to trade gold bullion, you might like this bar, BAR, Granite Shares, Gold Shares ETF. Look at shiny in comparison. So microsectors, gold 3x leverage. This is an ETN, so it's not an ETF. Again, you see it's very high, probably at its all-time high as well. This one has not been around as long. Again, very high right now. Pretty small AUM, only 31 million. Pretty light volume, 43K. This is also not optionable. It is shortable. Expenses a little bit higher, almost 1%. And we're not going to get a composition since it's an ETN. We'll see if the ETF database has a basis. So this is the Spider Gold Shares. Invests also in gold bullion. So this is an ETN based on gold bullion. Doesn't look like it pays a dividend. Let's look at the ETF database quickly, see if we can get any additional information. So if we look at the holdings, so again, it's looks like it's got a silver miners ETF. Again, it looks like it invests in gold bullion, so not a whole lot of information. So you could pick whichever way, if you want to trade gold via gold bullion, you could pick the ETF, be it bar or shiny. Trade again, this is all leverage 3x, so it's a leveraged ETF. So be aware of potential deterioration due to leverage. But again, gold's been trending strongly upwards, so you might be able to benefit from that. Again, we've got a number of other ETFs you can look at to trade gold, also silver, long or short, palladium, platinum, etc. Also, all the other sectors. So and all the other commodities, natural gas, oil, etc., the other metals, the indices, also, as we mentioned, countries. So talked about a number of other countries. We'll probably talk about some more tomorrow. You mentioned Malaysia, Indonesia, so again, you can take a look at IDX. IDX, I believe, is not optionable. Malaysia, we saw those bounces in Malaysia, so you can look at EWM, Thailand, THD. And again, as we talked about New Zealand recently, we've also got South Africa. We saw that had a strong performance, South Korea. So again, as we get these tariff announcements, if you think there's an opportunity to trade an international market based on these tariff announcements, you can jump over to our ETFs Google Sheet, do a quick find some ETFs with the composition, leverage, etc. That you like, and trade those international markets. Again, some we have longs and shorts, and some of these ETFs you can short if you can short the ETF in your account. So a lot of opportunities. Again, if you're nimble, again, I think this tariffs is going to create a lot of volatility, particularly in the international markets. Also, we talked about the Forex, so you can find a lot of the Forex ETFs in the ETFDB sheet of our ETFs Google Sheet. So again, and some of these may be shortable, so check out if you think long or short on some of these international foreign currencies. You can jump over and take advantage of those using our ETFs Google Sheet as well. So if you have any other questions, again, we'll slowly whittle off our list of other ETFs we've added over time. A lot of single stock ETFs. So we've got single stock ETFs also in our ETFs Google Sheet that you can find. And as we get others, we'll add those as well. And give you a one-stop shop to find ETFs to trade, whatever trade idea you may have. Again, if you have other ETFs you'd like us to do research on, potentially add to our ETFs Google Sheet, please put those in the comments to our video or contact us on our Discord, tag us in our Discord with BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, please ignore and report them. Hello, Fairchild. If I missed you earlier, thank you for joining us. Hope you had a great trading week. Also, we'd love your feedback on what we can do to continue to improve our weekly trading game plans, any of our videos, our tools, our Google Sheets, etc., our community, etc. We again need your feedback on what can we do to continue to add more value for all of our BeachBum traders. Also, we really need your help. Please smash the like button on our video. Help us try to get the YouTube algorithm to someday show us some love and share our content with more traders around the world. Also, we really need and greatly appreciate if you directly share our content with your fellow traders, repost our content on your social media sites, etc. Invite your fellow traders to join us in the live chat, join us in the Discord, etc. So thank you to everyone that joined us in the chat today, everyone watching after the fact. We hope you'll come back tomorrow for part 2 of our weekly trading game plan for the trading week of March 31st through April 4th, where we'll take all these trade ideas, trade strategies, etc., market analysis. We'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. Also talk about how we use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So we hope to see you 10 a.m. on Sundays for part 2 of our weekly trading game plan. So thank you again and have a great day.